Let's talk Treasury bills, commonly known as T-bills. They are often regarded as one of the safest forms of investment because they're short-term and they're backed by the US government. I recently bought $10,000 worth of T-bills and I liked it. I liked the yield and I liked learning about them. And when they matured, I bought more. So in this video, I want to explain what I've learned about how T-bills work and show you how I bought them very easily through Vanguard. What are T-bills? Let's start with a quick explanation of Treasury bonds, notes, and bills, because this is important to understand. The US Department of the Treasury offers a few types of financial securities that you can buy. You may have heard of Treasury bonds, Treasury notes, and Treasury bills. They're all essentially IOUs from the government. You, the buyer, buy one of these and it's basically a loan to the government. In return, you get a certain yield or interest rate. Treasury bonds, notes, and bills are similar in that way, but they're defined by the time period they take to mature. Treasury bonds are long-term securities issued by the US Treasury with far-dated maturities of 20 and 30 years. They pay interest to the holder every 6 months until maturity, at which point the face value of the bond is also returned. Treasury notes are intermediate-term securities issued by the US Treasury. They have maturities in the range of 2, 3, 5, 7, and 10 years. Like Treasury bonds, Treasury notes pay semi-annual interest to their holders and return the face value upon maturity. Treasury bills, or T-bills, are short-term debt securities issued by the Treasury. These have maturity periods ranging from a few days to a year. There are different types of T-bills categorized by their durations, including 4-week, 13-week, 26-week, and 52-week bills. The government issues new T-bills through auctions held on certain days. The auctions usually occur on a weekly basis on specific days. For example, 4-week T-bills are auctioned every Tuesday, 8-week T-bills auctioned every Thursday, and 13-week T-bills are auctioned every Monday. Each type of T-bill carries its own interest rate, commonly referred to as the discount rate. And it's called the discount rate for a good reason, which brings us to how T-bills work. Here's how it works. T-bills are purchased in $1,000 increments, and investors purchase T-bills at a price lower than their face value. For instance, let's say you buy $1,000 of T-bills at a price of $990. At maturity, the government pays back the full face value of $1,000 to you, essentially yielding you a profit of $10. The difference between the purchase price and the face value represents the interest you earned. That's right, T-bills don't pay out interest like you might think of it with a longer-term bond or a note. Instead, T-bills are sold at a discount to their face value and redeemed at full face value upon maturity. So there's a yield, sort of, but it's basically because the government sells them to you for less than they're worth. This is something I really like about T-bills. Because they're short-term, they're very safe, and because they don't pay out interest payments, they're very simple. But why would they sell this bill for less than it's worth? Well, we have to remember that money has a time value. So the government is willing to give you a discount because they want your money right now. They need to do stuff with that money. They need it so bad that it's worth more to them to take slightly less of your money right now than to give slightly more of your money back to you later. You, on the other hand, well, you don't really need that money right now, do you? It's sitting around in your account collecting dust, hopefully earning some interest too, in a checking or savings account at your bank or settlement fund at your brokerage, but unlike the government, time is on your side, so you decide to lend the government your money by buying their T-bill for less than it's worth. And when that bill comes due, anywhere from a few days to a year later, the government pays you back the full value, which is a bit more than you paid for it. Once again, it's important to understand that you don't receive any interest payment along the way. The entire yield that you receive is the difference between what you paid for the bill and what it's worth, and you won't get paid back until the bill reaches maturity. T-bills offer several benefits, including their high liquidity, as they can be easily bought and sold in the secondary market. That's right, you can buy T-bills at auction as they are created, or you can buy and sell them on the secondary market through a brokerage like Vanguard. Another big benefit, while interest income from Treasury bills, notes, and bonds is subject to federal income tax, it is exempt from all state and local income taxes. This definitely adds to their appeal. T-bills are a great way to earn a little extra on your cash at a guaranteed rate for a fixed, short-term period of time. No matter what happens to rates, you know how much yield you'll get paid over that period of time until the bill matures and you're paid back. However, it's essential to note that while T-bills are considered one of the safest investments due to their government backing, they still carry some degree of interest rate risk. The longer their date to maturity, the more risk there is. Risk of changes in inflation or interest rates, making the bills less valuable in the secondary market. But that risk is still very low, and if you're planning to hold them to maturity, then it doesn't matter anyway. You'll get the full face value when they mature. There are a couple of ways to buy T-bills. As I mentioned, new bills are sold through an auction process. You can buy new issue T-bills directly from the Treasury at their website, treasurydirect.gov. When you buy T-bills at auction, you don't know exactly what the price and yield will be until the auction is over and it's settled. As a non-competitive bidder, you just have to accept the price and rate that you get. The other way is that you can buy T-bills on the secondary market. These are T-bills that someone else bought directly from the Treasury, and now they're selling them to you. Maybe for less or more than they bought it for, but that doesn't matter to you. All you need to care about is the maturity date and the yield. And with these secondary purchases, you know exactly the price and yield you're getting. So I like that aspect. But let's take a look at a couple of recent T-bill purchases that I made within my Vanguard taxable brokerage account. This will give you an idea of how easy it is to put your cash to work short-term in T-bills. Both of these were purchased on the secondary market through Vanguard. Vanguard also offers the ability to purchase new T-bills, but again, this just seemed like an easy and straightforward way to get started. This first transaction I want to show you is the accounting record of the complete process from buying a T-bill to having it mature and receiving my money back with interest. So if we look at the bottom row, I bought $10,000 worth of US Treasury bills on November 15th, but I didn't actually pay $10,000. I paid $9,982.47. This Treasury bill was set to mature on November 28th, and absolutely nothing happened until November 28th rolled around. And at that point, you can see that the Treasury bill was redeemed and $10,000 was swept into my settlement fund. And that included the $9,982.47 that I paid for the Treasury bill, along with $17.53 extra interest. So that's the difference between what I paid for the Treasury bill and its face value of $10,000. It's important to note that I didn't see this money at all until the maturity date rolled around and I did get all this money back. Anyway, the next day I decided to put that cash to work again and buy another T-bill on the secondary market. And here's how that went. In my taxable account at Vanguard, I started by going to the Transact menu. I bypassed all the usual suspects like buy Vanguard funds or trade ETFs. I went all the way to the bottom to trade bonds or CDs. Then I used the quick search tab and I was looking for a very short-term T-bill again, so I selected 1 to 3 month treasuries. Next, I selected the Treasury bill that I wanted from the list. It turned out the first one on the list looked good to me, a 5.391% yield with a January 11th, 2024 maturity. 12 days to maturity, settles the next day, easy peasy. I continued, and then I needed to select how many thousands of dollars worth of T-bills I wanted to purchase. Remember, they have to be purchased in $1,000 increments. It defaults to $1,000. But I'm a big spender. I'm buying $10,000 worth of T-bills today. I continued, and Vanguard showed me the final numbers and last-minute warnings. Looks like I'll make $61.48 when all is said and done. I feel good about this, so I submit the purchase. There's the confirmation and order executed. And a short time later, there's this new category in my list of Vanguard assets that wasn't there before. I now have a bonds section, and this US Treasury bill is listed right there. I can look at it whenever I want, or even sell it if I really wanted to. But I don't want to sell. I'm holding until maturity, baby. Gonna get my $61.48. Another interesting thing to notice here is that the original date that the bill was issued is listed in its name. See, this must have been a 26-week T-bill when it was originally sold, from July 13th, 2023 through the maturity date of January 11th, 2024. The date it was sold doesn't do anything for me really, but it's just interesting to note. And then Vanguard even sends me a notice of order execution by email, just like any other order. Thanks, Vanguard. Alright, buying these T-bills is easy and kind of fun, and the government is selling these T-bills for less than they're worth. So why wouldn't I just buy as many as I can afford? Well, good question. And maybe you would, unless, 1, you need the money for something else, like you have an upcoming expense and you can't go tying up that money in a T-bill, which you may have to sell at a loss if you need it early. Or 2, you can earn more on that money somewhere else. This could be in the stock market or longer term bonds, maybe a CD, or maybe you think interest rates will continue to rise and you should hold out for more yield. Typically, to earn more than a T-bill, you'll need to either take more risk, like buying stocks, or tie up your money for longer, such as with bonds or notes, which due to interest rate risk essentially means also taking on more risk. Now, I'm currently earning almost as much as I am from these T-bills just by parking that money in VMFXX at Vanguard, the federal government money market fund. So why am I bothering with these T-bills at all? Well, it's true that it might not be worth the extra effort, but with the T-bills, you are at least getting a little bit extra, and more importantly, you're locking in that rate for the time left in the Treasury bill. With the money market fund or a high yield savings account, that rate that you're getting could change at any time. There's no guarantee that the rate you're enjoying today will be the same tomorrow. So with bonds, notes, and bills, they give you a guaranteed rate for a guaranteed period of time. Kind of like a CD at a bank, but more flexible. So there you have it. Treasury bills are an integral part of the financial market, offering a safe haven for investors seeking stability, liquidity, and a predictable return on their investments. And now that rates are much higher than they've been, it's given me a reason to really dig in and learn about them and even buy some. I bought T-bills and I liked it. Now, it's not going to move the needle much towards my financial independence, but the thing is, this interest rate environment is not guaranteed to stay this way forever. T-bills are an easy way to lock in a better than 5% guaranteed return on your cash, at least for the short term. Alright, that's what I have for you in this video. If you enjoyed this one, do me a favor and give it a like and subscribe to my channel for more videos on saving, investing, and early retirement. Thanks for watching.